Hello and thank you for joining us. I'm David Koch and today I'm talking to Brighter Super's Chief Investment Officer Mark Ryder about Brighter Super's performance last financial year and his insights on global markets. Hey Mark, good to see you.
Hi Dave, it's good to see you too.
Let's start with the fund's performance. How did last financial year go for Brighter Super's investments?
Despite the economic headwinds, Brighter Super delivered strong returns for members over the past financial year. Some examples of returns for the year ended 30th of June 2024 are, for accumulation accounts, growth returned 11.91%, balance returned 10.57%, and My Super returned an above median result of 9.07%. For pension accounts, growth returned 13.44%, balance returned 11.92%, and conservative balance returned 9.79%. We're delighted with the double-digit returns that our growth and balance options have achieved during the past year, building on the long-term performance we've been seeing across the portfolio. These returns gave us high rankings in Super Ratings' latest survey of super funds. Our growth option was ranked as the highest performing option in its category for 5 and 7 years ended 30 June 2024 for both accumulation and pension accounts. Our balanced option was ranked as the second highest performing option in its category for 5 years ended 30 June 2024 and highest performing option in its category for 7 years ended 30 June 2024 for both accumulation and pension accounts. Brighter Super had 9 accumulation options and 8 pension options in the top quartile of their respective SR50 and SR25 index for 5 and 7 years ended 30 June 2024. Delivering these solid returns is a fantastic achievement given the challenging conditions globally of continuing inflation and high interest rates.
Mark, how can members keep track of their returns on an ongoing basis?
Members can track the latest returns for all investment options on our website at brightersuper.com.au performance, and they can log into their member online to get an update report on their account.
All right, let's step back and take a look at the bigger picture. How have domestic and international markets shaped the investment performance?
The last financial year in global markets had its ups and downs, but ended overall in positive territory. Global markets have experienced periods of uncertainty regarding high inflation and interest rates, followed by periods of optimism around the fluctuating prospect of central banks lowering interest rates. We're still waiting for interest rates to fall. Our default My Super option initially fell in the opening months of the financial year before beginning to rise in late 2023, fueled by strong share market performance, notably in the technology sector, and a boost in market confidence due to easing inflation and expectations of interest rate cuts.
Okay, with all these ups and downs surrounding inflation and interest rates, what's been driving the fund's solid performance over the last few years?
The asset classes that have been primarily driven overall option returns have been Australian shares and international shares. Share markets rose on an improved economic outlook in the US and a surge in tech stocks due to rapid demand for artificial intelligence-related technology. We also saw positive returns posted by private equity, infrastructure, diversified fixed income and cash. In contrast, property has been the only asset class to post negative returns. Falling prices in the office sector have been the major source of weakness on the back of higher interest rates and poor occupancy in the post-COVID environment. However, property is an important part of our diversified portfolio, and as a growth asset, it can deliver higher returns over the long term. This slide shows the allocation of assets in the My Super option on the left and the returns for each asset class on the right.
Right, Mark, take a look in your crystal ball now. When will interest rates start to come down?
The US Federal Reserve has kept interest rates at 5.5% for the past year. Markets expect rates to start falling soon in the US, with expectations of going down to 3.5% by mid-2027. Australian interest rates followed a similar trend, but have risen less than in the US to date, standing at only 4.35%. Slower growth and easing inflation are the catalysts for lower rates. Investor confidence has been steadily increasing this year, and signs of inflation easing globally have fueled speculation that interest rates may be cut later this year in the United States. This is following on cuts in official interest rates by the European Central Bank and the Bank of Canada. This fluctuating expectations of cuts has boosted share markets in recent markets. However, in Australia, it looks to me as if we'll be facing stubborn inflation for a bit longer, and interest rate cuts should lag what's happened overseas. So in the meantime, we'll be monitoring the situation closely.
But we've been seeing some really encouraging signs in the US market up until late. Tell me what's happening over there.
The US share market has risen by 42% since January 2023 to end July 2024. Along with growing optimism around rate cuts, the other key driver has been the rise of a small group of technology stocks known as the Magnificent Seven. They are Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia and Tesla. Combined, these 7 stocks rose by 173% with a market value of $13.7 trillion. These stocks have been driven by rapid demand for artificial intelligence. Nvidia has been the clear leader of the pack, followed by Meta. The S&P 500 share market index, excluding these stocks, was up only 24%. However, in early August, global share markets weakened, and there were a few factors behind this.
Yeah, okay, tell us about these factors.
We're seeing concern around a recession in the US, some uncertainty regarding the outlook for artificial intelligence, and the impact of the end of zero interest rates in Japan.
Okay, so looking ahead, what's next for financial markets and all our superannuation?
Going forward, markets will be driven by the balancing act of enough economic growth and not too much inflation. The US economy continues to grow despite high interest rates, but is slowing with inflation easing, with some concerns about a recession. As a result, rate cuts will come over the next year, which should support in time the broader share market outside of US technology stocks and other investments such as property and infrastructure. The presidential election has taken a couple of dramatic turns in recent weeks, so it'll be interesting to see how that plays out.
It certainly will. What about closer to home?
China is in a completely different position. Its weak economy has resulted in deflation. The world's second largest economy is struggling with an ongoing property crisis, high local government debt, weak consumer spending and high unemployment. With rate cuts to be slower to come in Australia and the weakness in China, the outlook looks more mixed at home. Despite high interest rates, mixed global growth and a weak Chinese economy, Brighter Super still delivered solid returns in 23-24, particularly where there has been a larger allocation to growth assets such as shares. However, we're not entirely out of the woods yet. Share market valuations are not cheap, and we still need inflation to fall further to ensure rate cuts are forthcoming. On top of that, we've got trade wars, military conflict, increasing international inequality, and the energy transition to renewables. It makes for an uncertain world. To help us navigate these uncertainties, we focus on building a well-diversified portfolio and selectively using active management to generate solid long-term returns for our members.
Let's bring it back to the domestic front. What's the fund doing to support Queenslanders with local investments?
We have recently announced an increase in our investment in Queensland assets by an additional $500 million to be invested over the next 3 to 5 years. Brighter Super already has $1 billion invested in Queensland assets across diverse industries such as transport, agriculture, hospitality, retail, commercial and industrial property. Our strategy involves supporting our members where they live and work while delivering strong returns. This additional investment in Queensland assets will support job creation and economic growth at an exciting time when Queensland is gearing up to host the Brisbane 2032 Olympic Games. We have more than 70% of members that live in Queensland, so it makes sense for us to invest in the state to help drive sustainable growth and create lasting positive impacts for our members. Brighter Super is Queensland's 4th largest non-government financial institution. We are committed to investing in Queensland to drive sustainable growth and create lasting positive impacts for our members and their communities.
Yeah, Mark, that is so great to hear. And are Brighter Super members now enjoying the benefits of all the recent mergers?
Our members are now benefiting from expanded investment capabilities. Their super is invested in a much larger investment pool, and they're benefiting from the skills and experience of our wider investment team. The mergers added liquidity to the portfolio, and this has enabled us to diversify our portfolios and access better opportunities. We've also just finished consolidating all investment options from the 3 merged funds into a single set of options for all members. We've selected our best options, removed duplication, reduced costs, and made it easier for members to decide how they would like their superannuation invested. Since the mergers, we have also reduced fees and costs. The latest fee reduction was made in May this year, when we reduced investment fees for most of our options. We also made changes to our administration fee and cap, which represents significant savings for many of our members.
And finally, Mark, is there anything members can do with their investment choices given these uncertain share market and global economy?
It's important to avoid making snap decisions driven by short-term market fluctuations. For most people, superannuation is a long-term investment, so keeping your investment timeline in mind is crucial. During uncertain times, I always urge members to stay calm and focus on the long term. While past performance is not a reliable indicator of future performance, historically, markets have recovered and grown over the long term. For any member who is feeling uncertain or looking to change how their super is invested, I recommend they seek financial advice. Whether they have their own advisor or would like to talk to our in-house team of advisors, it's always a good idea to get some advice before making decisions regarding your financial future.
Yep, sounds very sensible to me. Mark, thank you for joining us. Great to see you. Always good to talk to you. Until next time, bye for now.
Thanks, David.